Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin charts as we take a look at whether or not this current Bitcoin crash is really just a giant bear trap. So with that being said, let's get right to the charts. Now, we will start over here on the Bitcoin USDT daily candles, and this is on the Binance exchange. And right now, as you can see, a few days ago, Bitcoin crashed and is now currently struggling to hold basically the 25,000 level and is setting up to what looks like somewhat of a bear flag. However, there is a possibility that this was just a bear trap, and the way a bear trap would work is you get this big pump like we saw, you get the sell off as the bulls are now exhausted, then the price comes into a level of support, and then eventually that level of support is broken, and now it's up to the bulls to step up and push Bitcoin's price up. Now, we did see quite a wick at the bottom of the candle on the crash. However, as I mentioned in the video that I uploaded after this big crash, this looked more like a dead cat bounce to me, and that's pretty much exactly what we got, was a dead cat bounce. And so I really question whether or not this is really a bear trap. I would have expected to see a little more momentum towards the top side out of the bulls if the bulls really planned on taking control of the battlefield. Right now, to me, it looks like the bears are in control. Now, if I drop in my drawing tools from the previous videos for the last several weeks, actually, we were actually watching a descending triangle. And in last Monday's video, I had mentioned Bitcoin's price is starting to get squeezed into the tip of the triangle, which would typically lead to a big move in either direction. And I had actually dropped in a target if the price broke down, as descending triangles are typically bearish. And so we dropped in a target down here around 27,500, and Bitcoin obviously hit that target. At one point it actually held at that level, but eventually it ended up dumping right through, and this entire move happened pretty much in 15 minutes. But had you been staying up to date on my Monday update videos, this move would not have surprised you. As Bitcoin's price broke below this bottom trend line, that was a signal that Bitcoin's price more than likely was headed lower, and the very next day the price did obviously dump. So with that all being said, what are some key levels we can take a look at now? Well, to do that, we want to drop in the Recon Auto Fib retracement levels, which you can see currently the 786 Fibonacci level, pretty much here at 26,000, call it 300, is acting as resistance. Bitcoin's price has bumped into that level over the last couple days and is struggling to get back above the 786 level. So the main battle is going to happen right now at this 786 level, or just above 26,000. Right now it's coming in at 26,300. Until Bitcoin can more than likely actually clear 26,500, the bears remain in control of this battlefield. Now, if the bulls can get above the 786 level, their next target would be the 618 level, which is coming in at 27,475. Call it 27,005. The bulls are more than likely going to run into very strong resistance at this level. And in fact, this is the level that I would need to see the price of Bitcoin to get back above within the next couple days in order for this to truly be, in my opinion, a bear trap. So again, if the bulls can get the price above 27.5, maybe even above the 50% level of 28,300, then that would be more than likely confirmation of this big crash being nothing more than a giant bear trap. After the 50% level, the next level is the 382 level, which is coming in at 29,128. pretty much you can expect 29,000 to be a huge level of resistance for the bulls, as that was a very strong level of support, and typically support turns into resistance, and on the flip side, resistance often turns into support. And speaking of the flip side, if the bears are able to keep the sell pressure on and push Bitcoin's price down, obviously the first target is going to be around the 25,000 level. And if we look back and check our 6, the low back here is 24.8. Any breach of 24.8, and by breach I mean a close of a candle, much like we saw up here when we breached through the essentially 29,000 level, we got a close of the candle, which led to this sell-off. And so again, if the bears are able to get a close below 24.8, which would be this low back here, the next target for the bears is going to be the 1272 level, and that's coming in right at around 23,000. In fact, it's 22,894. After the 23,000 level, it's open air all the way down to the 1618 level, which would put Bitcoin's price back at around 20,500. Now that would be perhaps the most important level of support. A breakdown below 20,000 and Bitcoin's price could be in a free fall. Now, if we add in the Recon EMA Ribbon, the last thing to take a look at, in last week's Monday update video, we were looking for the support of the EMA Ribbon, a breakdown below the ribbon, and that would be a bearish signal, much like you see over here where Bitcoin breaks down below the ribbon and continues to sell off as the ribbon turns into resistance. Well, on Tuesday, the price of Bitcoin broke down below and closed below the ribbon. And then the very next day on Wednesday, the ribbon acted as resistance and basically crushed the price down. Now, the last level of support would have been this white line running through the chart here, and that's the 120-day moving average, which had acted as support in the past, especially on these two wicks here. However, on the day that Bitcoin crashed, you can see it crushed right through that level. And in fact, Bitcoin's price actually crashed right through the yellow line you see running through here, and that's the 200-day moving average. This is very bearish price action, and the fact that the Bitcoin bulls have not been able to get the price right back above the 200-day moving average, again, looking back and check our 6, like what they did back here when Bitcoin did for one day close below the 200-day, they got it right back above and then went on to push up. That is not the case right now, and unless we get a big move above this 200-day moving average, Bitcoin's price is still going to be bearish, and it's less likely that this was a bear trap, and more than likely the bears have just taken full control after all of this consolidation. But if there's any major changes over here on the charts, I will do an update video. So now would be a good time to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.